While we're talking AI, an investor group from BlackRock, NVIDIA, XAI, and Microsoft agreeing to buy the company Aligned Datacenters for about $40 billion. Marks the largest data center transaction so far.
By the way, NVIDIA and AMD are also doing pretty well this morning. NVIDIA was down yesterday. AMD continues that incredible ascent that it's seen since really it announced that deal with OpenAI a little more than, a week or so ago.
People are still trying to put pen to paper to see what Sarah Fryer came up with when she made that deal with Lisa Su. I say that Sarah Fryer, the CFO of OpenAI, she has historically done deals that are great on both sides. There are a lot of snickering about what's happening there, but AMD is very for real. And NVIDIA upgrade today. Who the heck is not even recommending the darn thing? In the shadows is this understanding. It's always said, oh yeah, I know NVIDIA is the best. Oh yeah, NVIDIA is the best. I mean, okay, if it's the best, then why not buy the stock of NVIDIA?
Well, they have, they got those. What are their margins? 80%. Incredible margins, right? Because of where they price these GPUs, because everybody needs them. But it doesn't mean that there's a shortage of people or companies that are trying to compete with them, Jim, and at some point perhaps could represent true competition, and or that there could be a change when you really move to inference in terms of the need for exactly what they're providing. I'm just saying, this is what you hear, right? Well, obviously Google uses its own TPUs. It may have a cost advantage versus any number of other companies out there with their own large language models because of the TPUs that Google has. It's not that they're not buying NVIDIA chips for their cloud product, but it gives them an advantage.
No, you're right. But remember, what NVIDIA has done is made it so it's a software chip. And AMD does not have a software. There's a stack, which makes it so you can, first of all, get a lot of let me just bring up CoreWeave. The chips that NVIDIA had used, the older ones, they're still working and they're still good for a lot of customers. The new next iteration, the Vera Rubin from Philadelphia, by the way, astronomer, that is going to be filled with software, and that is the moat for them. Yesterday, someone attacked me. They said, do you know what the PE of NVIDIA is going to be in 2027? And I said, yeah, it's kind of a market multiple.
Yeah, it's like 25 times. I know. What about depreciation schedules on the GPUs? Because that does figure prominently in terms of the investor case for the likes of CoreWeave and or many others, even Oracle, which is going to be spending so much money, and so many others that are building and or outfitting at least data centers.
Well, okay, so it's 5-year for NVIDIA. InTrader says that these things could be worth for multiple years. Obviously, the gravy, the real capital, is what happens after 5 years. That's where CoreWeave will make the money. We haven't been talking about CoreWeave. Instead, we've been talking about Nebius. I'm not kidding. I mean, we're starting to talk about the tertiary guys. Hey, by the way, the bell ringer, HPE, doing incredibly well. Michael Dell doing incredibly well. He was very excited last night yesterday about his business. There are a lot of people making a lot of money, and then there's OpenAI, which is losing a lot of money, but is spending a fortune, and that is the one that everybody's so worried about. Carl, people think that OpenAI is the bubble. If I have to hear circular buys again, that's a lie. There's nothing circular about what they're doing. They are trying to stop everybody. They're trying to go after every single vertical. They're trying to go after social. They're trying to go after search. They're trying to go after retail. And so they need to spend a lot of money. I don't know if they can beat any of those companies, though.
No, I know, and they need to do that in part. Listen, I take nothing away from what they've been able to pull off at OpenAI. It's incredible. Not to mention, of course, the revenue growth of the company, which is astounding and which will continue. But to your point, Jim, they've got to try and compete in all those areas, and they are, in a sense, trying to create their own dominance by all of these deals that they're entering, and the companies that they're entering them with are happy to do so. So, I mean, maybe they do succeed, and maybe it's not dissimilar from, when we looked at Amazon in, what was it, 97 or 98, right, saying, well, or geez, they're selling books, and what's the plan? Well, the plan is obviously to do an awful lot more than that, and they're seeing far, far ahead in a way that those who are naysayers perhaps are not.
Yeah. Is this starting to get concerning that we're seeing these announcements related to chips involving so many other companies outside of NVIDIA, whether it be AMD, Broadcom, a lot of other names seem to be getting in the mix, and it seems like just a few months ago we were talking about this incredible moat that NVIDIA had.
Well, the simplest answer to that is that the backlog for NVIDIA chips is kind of off the charts. So I'm not really worried about that. If I were a customer of NVIDIA or a prospective customer, I would look at it and say, I've got to go somewhere else to get chips if I want to get them in the near term. So I'm really not worried about NVIDIA from a fundamental point of view, nor am I from a technical point of view. And not to rehash what we were talking about 10 minutes ago, but I do believe Joe is right, and everybody else, that the rally is going to continue through year end. Whatever concerns I may have, I think there's just going to be the chase for performance, and that's going to center on NVIDIA. That is the bellwether of the bellwether trade, which is the artificial intelligence trade.
Yeah, but we had Brad Gerstner on our air earlier on Squawk Box. He's saying NVIDIA is going to compound over the next 3 to 4 years. Joe, you also own this name as well. Agree with that take to this company, due to backlog or other issues, has a very long runway.
I would agree with that. Look, Brad Gerstner knows far more about technology spending than I ever will. So I'll take Brad at what he's suggesting on air. But it's very clear to me, just from the standpoint of here you sit October 15th. And if I'm sharing with the viewers that I think a chase for performance is going to be underway through the remainder of the year, I find it very difficult to believe that the semis are not going to participate that and continue to do what they have done, which is rally nearly 85% off of the April lows.
AI is moving at 10x the speed of the internet, right? OpenAI got to 1 billion users, right? Radically faster than Google did. It got to 10 billion in revenue, radically faster than Google is. I think there's a sense for every company that wants to compete. Right. Whether you're a chip company like AMD or whether you're a frontier model like Anthropic, like now is the time. So it's going to continue to heat up.
And for more on what's next for tech and AI, let's bring in Paul Meeks, head of technology research at Freedom Capital Markets. If you just add things up, Paul, it's just like really exciting. It's not all bees either. We've talked in cheese with some of these things. What we asked Gerstner earlier today was, sounds great. Is the money going to be there that we're hearing about to build the energy for these data centers, to buy the chips? I mean, companies are giving each other money to buy things from each other. It's all a little bit strange.
I agree, Joe. It is strange, and I lived through the internet bubble, so I know how it works out on the other end. But I will tell you this, that the spending, even though it's very aggressive, I do expect that it'll continue for several years because the folks that are spending the money have the balance sheets and the cash flows to mostly fund it. And they all, to a man, have said in their public commentary that they see the first mover advantage in this AI nuclear arms race to be absolutely critical. So they will continue to do it. Yeah, when we get out 3, 4, 5 years, then I'm starting to get a little bit more skeptical, but I do expect this to continue apace for the next couple.
We've seen big capital expenditures, CapEx expenditures, building out other things in the past. And no one, I don't think, could have, I guess, predicted how powerful the internet would be in every part of our life. Is that promise at least equal with AI that we saw with the internet, and even maybe 2 or 3 times that? It's staggering, because all we're doing now is just spending all this money to build it out. The payoff is going to be huge.
Like with any technology, they may overestimate the near term and underestimate the long term. I do feel that in the long term, AI will at least be an internet type of build out and follow on, if not bigger. When your guest this morning says 10x, that seems to be a little bit of a stretch to me. But obviously, it is well worth doing, and they will spend heavily because they think that it's important to spend heavily, at least through, let's get through 26, 27.
Right now, AMD is seeing as closing ground on NVIDIA, even if it's in a different part of the space.
Yeah, 6 gigawatts, though, it's just dwarfed by what NVIDIA is doing, A. And B, if you think about just the percentage of AI chips that AMD has been selling over the last couple of years, it's not particularly large. I think it got up to high teens last year. This is a company that still has to execute. This is a company that has not executed to their expectations over the last few years when it comes to AI chips. And I do think it's interesting that, by the way, Tim, AMD is the A in Gen AI.
Nice.
You know, because that was the theme. It was going to broaden out a little
Do
bit.
them, Matt.
We also had Intel in there. We also had EA in there, by the way.
in the game.
Which got taken out. So when I go back to this thing, I just think it's interesting that the market is giving these sorts of multiples to AMD, Oracle, and Intel. These are three companies that have so badly misexecuted, over the last 5 or 6 years into the play into this generative AI. And so if you want to re-rate them and you want to give them the benefit of all these orders that they are booking right now, have at it. I mean,
I'm hearing, this is just coming over the transom, that the A in Gen AI is actually applied materials.
Oh, wow.
So you're trying to pull
go back to
revisionist history, and no one was paying attention. You know, it means that no one was probably even paying attention to this Gen
I have an email that says it's
the crack staff in EC.
We got it wrong.
Busted.
Maybe we
I don't
got it
know.
wrong.
I don't know.
Wow.
You never know.
Busted.
The point still stands, though, that you're skeptical as to whether or not they're going to be able to execute, to actually fulfill, to book the revenues that these analysts are according them at this moment in time.
Well, what are those? I was thinking, okay, there's 50,000 chips, right, for next year, starting 2026. I don't know. I put a $40,000 price on the chip, $2 billion. I thought, well, that doesn't seem so much. Actually, relative to the revenue, that would be a nice bump if that's just the start of something. What's the multiple on that? I don't know. What's the margin? I don't know that either. But
the margins relative to NVIDIA are going to be just, I don't know, half maybe. I'm just throwing that out there. And you think about it, how are they competing with NVIDIA on price? You know what I mean?
Yeah, but the market cap is more than 1/10 below NVIDIA. I mean, you're talking about proportionate dynamics. I mean, there's no question it trades at a massive, massive discount.
Wow. I mean, that's a heady conversation there. I was just going to ask Dan, we don't have a lot of time.
No, we don't.
So I won't ask him. I'll ask him in the break.
Yes.
I'll say this quickly. The fact that AMD traded down to the prior high, 210 from March of 24 in this recent sell-off and held is actually encouraging. So maybe Tim is on to something.
All right, but NVIDIA actually trades much cheaper to AMD, and it's got a 70% or 71% gross margin versus AMD at 51%. And if they're going to have to compete on price, you could see those margins going lower. So, I mean, to me, you can make the stronger case for AMD right now.
I don't think NVIDIA is expensive, by the way.
Excuse me.
NVIDIA.
I'm long both of them. I don't think NVIDIA is expensive here, for the record.
To get a machine to act like a human or smarter than a human, you need to spend a ton of money on the back end with warehouses and warehouses full of servers, making it all possible. And it's the back end that's the battleground. It's the back end that creates the gating factor for so many to understand what NVIDIA's CEO Jensen Huang calls the fourth industrial revolution. First being steam engines, second, mass production, railroads, third being semiconductors and personal computers. Welcome to the fourth. Those were all tectonic shifts in the way the world works. This is too. Hey, let me ask you something. If you were a seamstress in the 18th century, do you think you could have seen a steam-powered loom coming? If you were a blacksmith, could you have imagined the railroads? When you were busy using an abacus, did you think about a personal computer? No, you didn't. You certainly never thought of an iPhone. Some of us lived through the rise of the PC and the internet. It was magical. The fourth industrial revolution, the one that's powered by NVIDIA and now AMD, the one that's being ushered in by the hyperscalers, is still hard for most people to understand. Later in the show, you'll see Rene Haas. He's the CEO of ARM Holdings, wearing some glasses from Meta that are like having a second, smarter brain within your first. Not to be confused with Steve Martin's The Man with Two Brains, which I like very much. You can speak to people in myriad languages. You can take pictures without being an intrusive jerk who whips out the cell phone at the most inappropriate moments that I saw, like, for instance, last night when I was at Salesforce dinner. You can personalize an order from Williams-Sonoma so it knows everything you need. I know what you're thinking, small potatoes. It can't justify the trillions of dollars that are being spent on the data center build-out no matter what. That's why so many people believe this is a bubble. It doesn't help that some companies like OpenAI, the creator of ChatGPT, are spending money on all sorts of equipment that it seems like it's well beyond what they can afford, even if the company comes public with a $750 billion valuation. My best estimate for what if it does IPO, and it might IPO, we just don't know when. It's the cost of the build-out that's turning analysts and hedge fund managers into raving lunatic bears who are growling and clawing at everything in the AI food chain. They think the OpenAI is doing what's known as circular deals, which is a legal way of describing vendor financing, where a company offers money to a customer so the customer can afford to buy what the vendor wants to sell, something that only occurred near the top of the dot-com bubble in, say, 1999 December to 2000 March 3rd. Now, let's go back to the earlier industrial revolution. Let's talk about the rails. When the rails emerged, we had tons of railroad companies laying track all over the place. They overbuilt like crazy with borrowed money. Many of the individual rails collapsed, but the technology stuck around. And once the losers got wiped out, the winners won big. I believe that this is the right analogy for the AI data center build out. You must ask yourself, would you at the time ever think that your horse would be replaced by an iron horse? Initially, most people said, hold it. So what? So what if it goes faster than my horse? We still end up in the same place. I mean, what's the big deal? I am telling you, this is just the beginning. The build-out will have casualties. So did the rise of the railroads. So did the steam engine and the assembly line and the internet. But the people who built these had a vision like Zuck or Elon or Jensen or Sam or Andy or Lisa or Larry or the whole shooting match. Here's the bottom line. I can't ask you to grow your head. I wish I could. But I can tell you that these people behind the AI revolution, they're not clowns. They're not mountebanks. They're the best we have. You can question them, but my charitable trust is investing in them. After this trip, I definitely wouldn't bet against them. I'd choose one or two and hold on for the ride.
All right, I hope you're all doing great today and staying calm in this market. Today, it was announced that a consortium of companies, including BlackRock, Global Infrastructure Partners, Abu Dhabi's MGX, NVIDIA, XAI, and Microsoft are teaming up to purchase Texas-based Aligned Datacenters in a deal worth $40 billion. The consortium plans to expand Aligned Datacenters quickly in the coming years and more than double its 50 data center campuses in the U.S. and Latin America. The goal is for these data centers to be leased to large tech companies, helping boost those companies' valuations by alleviating their need to construct so many new data centers. The chief executive of MGX said, quote, "We very much believe that the requirements for global capacity build-out, both from a cloud and AI perspective, are massive. We're talking about roughly 20 gigawatts a year globally, and about half of that would be in the US. NVIDIA currently gets about $35 billion in revenue for every 1 gigawatt data center. If we're talking about 20 gigawatts coming online annually, that would be roughly $700 billion in revenue going to NVIDIA. And that number could be even higher, assuming NVIDIA will likely charge more for future generation products. That's also assuming that NVIDIA maintains roughly the same market share. As I keep saying, I think NVIDIA has plenty of runway ahead of it. I think most analysts are still underestimating NVIDIA's long-term growth. Speaking of analyst estimates, we got a new street-high price target upgrade today for NVIDIA from HSBC, which raised their NVIDIA price target to $320 per share. I don't put much weight behind analyst price targets, but I mention this so that you're aware of what's happening. And again, I think most analysts are still substantially underestimating NVIDIA's long-term growth. Also today, it's being reported that Nscale will deploy 200,000 NVIDIA GPUs in Europe and the US in an expanded agreement with Microsoft. We also learned today that Meta plans to invest $1.5 billion in a Texas data center that is expected to come online in 2028. The site will be able to scale up to a 1 gigawatt site. Really quick, I want to mention a very interesting piece of news we got today from an NVIDIA blog post. StarCloud, which is a member of the NVIDIA Inception program, is preparing to launch NVIDIA H100s into space this November. Yes, we are now talking about data centers in space. In space, data centers will have access to very low-cost, renewable energy from the sun and unlimited cooling from the vacuum of deep space. This means the data centers will not have to rely on access to water, batteries, or backup power. This is fascinating. We've heard some talk recently about potentially having data centers in space, and StarCloud may be the first to make it happen. This will be very interesting to watch. I continue to be bullish on NVIDIA long-term, and I think this company still has a lot of runway ahead of it. That's why I keep talking about this company. I am serious when I say that I think most analysts are substantially underestimating NVIDIA's long-term growth. While many in the financial press are hyperventilating about bubbles, NVIDIA is trading at a lower multiple than Costco and Walmart. Yes, the most important company in the world is trading at a lower multiple than retailers. Why is this important? It's only a matter of time before NVIDIA moves higher. NVIDIA has the earnings and the future growth to more than justify its current valuation. And I think it's safe to say that NVIDIA's earnings growth in the coming years is going to be substantially greater than both Costco and Walmart's. And so on a forward multiple, NVIDIA is fairly cheap. Of course, I expect NVIDIA's data center business to continue growing strong as the world is extremely compute constrained in the face of extremely strong AI demand. And we're nowhere near any type of bubble bursting type of event, not even close. While there are similarities between this AI revolution and the dot-com era, there are also fundamental differences in multiple key areas, as I've discussed in previous videos. And while I expect NVIDIA's data center business to continue growing strong, I think most analysts are substantially underestimating the long-term growth in some of NVIDIA's other business segments, such as AI robotics. Physical AI is likely to be the biggest wave of AI yet. Physical AI agents completing physical tasks in the real world will fundamentally change society, and NVIDIA is establishing themselves themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Physical AI is a massive long-term growth opportunity for NVIDIA, and it does not get enough attention. In addition to physical AI, NVIDIA also has other large growth opportunities that they are really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI-native startups, and quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen also told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Again, this is another large long-term growth opportunity that does not get enough attention. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held, and this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.